Let me bring on board Kumar Rakesh. He's IT and auto analyst at BNP Paribas, but more to do with IT. First off, great having you here, Kumar. Let me first start off with the numbers of TCS and what that is indicative of in terms of sector as a whole. Did you believe that anything changes structurally basis the commentary that came through?
Hi, good morning, and thank you for having me on the show.
Very good morning.
Um, so the TCS results, we have seen some of the global IT services companies report their results and speak about the geopolitical tension impacting their revenue and growth in the recent quarter and potentially in the coming quarter as well. In contrast to that, the TCS commentary was more hopeful that the impact is limited and potentially in the September quarter, the growth should start recovering across verticals. And that is definitely a positive takeaway in contrast to what we have heard from some of the global IT companies. And especially in the context when the growth for this year's at current valuation seems like is completely discounted, this is a positive surprise.
Typically, Q1 and Q2 are strong quarters for IT companies, but what we are seeing with TCS is that it's a slow start which is there with some kind of momentum behind it. Do you see that Q1 will be the inflection point for IT orders to come in, and that's what the street was also expecting, that it could be a turning point for many of the companies as the pilot stage projects now get into execution stage?
So we very closely track all the deal announcements done by globally by 2025 IT services companies every month. And we had started seeing that once the geopolitical tension erupted around March, April, and part of May as well, the deal signings had slowed down dramatically at actually one of the slowest deal signings that we had seen in the recent years. However, in the month of June, we have seen a very sharp pickup in deal signings and something in the deal TCV also, which has started to show up in some of the companies. And that is a good leading indicator to suggest that while June quarter start is slower than the usual June quarter numbers, uh, this hopefully should be the trough and potentially September quarter delivers a better growth. The caveat to this is how the geopolitical tension evolves from here on, because a lot of growth and actually the investment thesis for IT services sector hinges for now from the near term perspective on how the geopolitical tension is evolving and if the enterprises starts increasing their technology spending or not.
Interestingly, another thing which is being now spelled out more of by IT companies is that it's not just the AIs which they are getting integrated into the projects or functioning, but the token cost is also now getting factored in the SG&A expenses of the companies who are integrating this AI. Is that going to be some kind of a cost? Challenge going forward for many of the companies. While AI brings in immediate efficiency, it also brings in some costs for them.
You're right, man. Actually, a lot of companies are experimenting with the pricing model, revenue model, how essentially to price their work to the customers. Now, they are not only delivering their work using the workforce that they used to do, and the pricing model was pretty straightforward in that way. Now, there's like a lot of IPs which are getting used, the accelerators, the platform which these IT services companies have built. They have started charging for that as well. As you rightly mentioned, there's a lot of token which is getting used in the process of running some of the workflows on AI tools. And that is also a cost which is coming in. And sometimes that is difficult to predict. On top of that, there is a shift towards how the enterprises are expecting IT services companies to deliver the work is more outcome based. And you will hear from a lot of companies in the recent times, whoever had done their analyst day, to speak about how they are shifting towards outcome based pricing. Now, in the outcome based pricing, the challenge is, which you partly alluded to, is that the cost of tokens is difficult to actually predict some of the times. And you have committed to an outcome, you have committed to a price for that outcome. And if the cost increases beyond that, then that's a challenge for IT services companies. But these things are still evolving. We will learn as we go that how eventually it stabilizes. And we closely are tracking the token charges as well. And hence, in the near future, we will continue to see some of these disruptions. But the good part is that it is still small part of the overall revenue pool. So even though it goes out of expectation, it should not dramatically impact the profitability, at least from the near term. And from medium to long term, we would expect the cost to start stabilizing, the predictability starts coming in the pricing model, and that should help the companies better predict how the token costs are and how to price them to the customers.
Kumar, also trying to understand as to how should or what should one make of the risk reward available within that IT pack at this point of time. Of course, dividend yields are now at multi-year highs, valuations
All-time
at
highs.
multi-year lows, and if I can try and probably throw a spanner in the works. When you're looking or you're comparing valuations of Indian IT companies versus some of the others, the Accentures of the world, you're still trading at a significant premium. How do you look at all of this?
Let's take a step back when looking at valuation. The first thing, as you rightly mentioned, the dividend yield is very high. It's touching close to 7% for most of the large cap IT services companies. The current valuation is implying about 1% perpetual dollar revenue growth, about 3% rupee revenue growth. Even if there is no margin expansion, then we are talking about the current stock prices pricing in about 3% sort of an earnings growth. So you have 7% earnings dividend yield, you have 3% earnings growth, you get to about 10% total shareholder return is what the sector is offering now, which starts looking very attractive. So we have to keep that in context when we are comparing the valuation with some of the global peers. The total shareholder return at current valuations that this sector is offering is very lucrative compared to many other sectors. The unfortunate part to this is that the structural concern around how AI impacts some of these IT services companies, or maybe all of the IT services companies, is difficult to get settled within a quarter or two. So that is a debate which will continue for a few quarters. And because of that, the sector will remain range bound. And we have seen Nifty IT index move between around 27,000 on the lower side to about 31,000 on the upper side. And we expect that the sector will continue to be range bound within those levels. At around 27,000, Nifty IT starts looking very attractive. The bearishness starts looking highly elevated, and the risk reward starts tilting very positive. At 30,000 Nifty IT level, unless there is a structural debate which gets settled, starts looking relatively expensive, and the risk reward starts tilting towards mode of downside. And that's the way we are looking at the sector, at least from the near to medium term, till the time we don't see the structural debate starting to get settled.
Kumar, you have Infosys, HCL Tech all coming out with earnings next week. There is also, from a vertical point of view, you have the aviation, auto, travel and tourism, and retail. Four key verticals which are not, growing much because of the geopolitics and other reasons which are there. How are you looking at the other companies, top other companies in the IT pack?
So from result perspective, the expectations were already beaten down. As you rightly earlier mentioned, that the June quarter usually seasonally strong quarter. Despite that, we are expecting the growth to be more modest for most of the IT services companies, in some cases even a decline in this quarter. So the starting point from expectation perspective is relatively lower. At least towards the end of the quarter, June quarter, we started seeing things to improve. As I was talking about, the deals announcements started to pick up in the month of June. So hopefully we would start seeing that to spill over in the September quarter as well. And we should start seeing a better growth recovery going into the next quarter onwards. So from rest of the companies, we would expect, given that the expectations are quite modest, they should at least be able to meet or hopefully beat the way TCS did, although marginally, but still some positive surprises. If not on numbers, then at least on the commentary side.
Kumar, you track two critical sectors. It's difficult to squeeze both those sectors in one conversation. So we're just going to probably place another request for a conversation with you with regard to auto. That may also be well warranted. But thank you so much for taking our time speaking to us today and giving us that perspective, especially with regard to IT.
Pleasure.